The hardest thing about investing is not finding the right altcoin or finding the right stock. It is more about not getting distracted. There's so much information out there and most of that information is not relevant. In this video, I want to share what I think is relevant though. For example, this here. This is a very common narrative that the strength of the dollar has some impact on cryptocurrencies. What we've got over here is the DXY, the dollar strength index, and what we've got below is the Bitcoin price. And the narrative goes like this: when the dollar is weak, Bitcoin tends to go up. When the dollar is strong, Bitcoin tends to go down. Now we can already see how this not always applies, right? We've seen massive rallies, more than 2000%, while the dollar strength didn't really change much. We've also seen a massive crash in Bitcoin, more than 80%, with a subsequent recovery, while the dollar strength didn't do much. Now one might make the argument that because Bitcoin was very small in the early days, just a few dollars worth, that the overall traditional finance industry and the dollar strength didn't yet have that much impact on the price. It was mainly adoption of Bitcoin itself. And when we look at the recent price history, there seems to be somewhat of an inverse correlation, right? Again, Bitcoin going down when dollar strength is going up and vice versa. But once we look at this mathematically, this theory very quickly loses its credibility. What we've got over here is the 30-day correlation coefficient. It wiggles around 0. When the correlation coefficient is at 1, it means that two things move in the same direction at the same time. When it's at -1, it means they move in opposite directions. So +1 means when the dollar strength is going up, then the Bitcoin price should go up as well. -1 means when the dollar strength is going up, then the Bitcoin price should be going down. So the theory is that the correlation coefficient should be close to -1 most of the time. But for the 30-day correlation coefficient, so when we look at the performance over 1 month, we don't see that. When we look at 90 days, so now the performance over 1 quarter, again, we tend to not see that coefficient being close to -1. When we smooth it out even further, we look at 1 year, same picture. We are not close to -1 whatsoever. If we look at 4 years, so an entire Bitcoin cycle, again, there's really no clear connection. So this is a myth busted, hopefully. If you hear other YouTubers talking about the dollar strength and how a strengthening dollar will then depress the Bitcoin price, you now know that mathematically this is not true, no matter on what time scale. It's all just noise, it's all just distracting from what really matters. Now here's another interesting theory that tends to get more and more traction recently, and that is monetary policy, as in what's currently the interest rate set by the Federal Reserve and what's currently the Fed balance sheet. The idea is that when there is looser policy, when there is more money floating around, that the Bitcoin price, the very risk on assets, should appreciate as well. So again, we've got the Bitcoin price over here, long term, and what we've got at the bottom is the Fed balance sheet. It went up massively after the COVID crash. We continued to see monetary expansion, and then that stopped in April of 2022. At the time, we already saw Bitcoin going down by 42% from its all-time high. We saw subsequent tightening, but how is it possible when the balance sheet is going down that Bitcoin appreciated from 16K to above 100K? During that more than 500% appreciation, we saw the Fed balance sheet going down by 21%. So there was monetary tightening. So it seems like the Fed balance sheet is not the major driver for Bitcoin, right? How can we else explain a 500% gain? Something else seems to be way more important. Now there's another measure, right? The interest rate. So here's the target interest rate by the Federal Reserve. We saw monetary tightening from the end of 2015 to the beginning of 2019. And even though there was monetary tightening, we saw Bitcoin's price going up by more than 1,000%. The Federal Reserve then stimulated the economy by slashing interest rates. And we're not seeing the Bitcoin price going up at all during that time. It rather tended to go down. Then again, starting from March of 2022, we got monetary tightening. We should expect risk on prices to go down. And yes, we did see Bitcoin going down at first, but then it recovered again while interest rates stayed high. How is that possible? So no matter what we look at, the Fed balance sheet or the interest rates, there seems to be no real clear connection between the Bitcoin price movements and those two factors. I mean, in theory, there should be a connection, right? When there's more money floating around, then that extra money should go into the risk on assets. They should appreciate. In theory, it all makes sense, but in practice, we don't really see that. I actually studied finance. I'm not talking about this too often on this channel because I think the content should speak for itself. It's not all about credentials. It's actually about the content. But yeah, I've got a Master's of Science in Financial Analysis from the Hong Kong University of Science and Technology. And a lot of the theory that's discussed in academia does not really apply to practice. I actually made a separate video on this. But for example, the idea that the value of a company is simply the sum of its future cash flows, the expected future cash flows, it doesn't really make that much sense. There's probably way more factors getting into the valuation, because when interest rates rise, that would, in theory, according to academia, mean that technology stocks should be going down the most, because their present value, right? Their present value is mainly dependent on those future cash flows far out in the future, right? At year 10, at year 15, at year 20, because the cash flows go up over time. So when interest rates are rising, we should discount that future cash flow far out in the future much more. That should then in turn mean that technology stocks should crash when we've got monetary tightening, again because of all of that discounting. The Nasdaq 100 should do worse than the S&P 500 when interest rates are going up, but we don't see that. This is the Nasdaq 100 relative to the S&P 500. And when there's monetary tightening, when interest rates are going up, technology stocks don't necessarily lose versus the S&P 500. And when interest rates are going down, they don't necessarily gain much more compared to what they gained before. Again, same thing here, right? Monetary tightening, technology stocks did not get hurt by this whatsoever. They continue to appreciate versus regular stocks. Then we got monetary expansion. Yes, this cost already, but then again, we got our tightening cycle over here, and technology stocks actually performed pretty well. They continued to outperform regular stocks. So this academia standard knowledge, the idea is that prices are directly impacted long-term by Fed policy. I don't buy it. I simply don't see it in the data. There is one connection that I see, and that's the correlation between Bitcoin and technology stocks. So we've got Bitcoin at the top, we've got technology stocks at the bottom. And when we look at those curves, yes, there seems to be some connection, right? Over here, we've got the COVID crash in both. We've got the appreciation subsequently. We also have a contraction in prices at the same kind of time. So there seems to be a connection. And once we measure this actually with correlation coefficients, for the 30-day, we don't necessarily see clearly a positive correlation coefficient. But for the 90-day, we see already how there's much more hovering in the positive zone than in the negative zone. Once we look at the 1 year, we barely see any negative correlation. Yes, still a little bit in the early days of Bitcoin's existence, right, when Bitcoin wasn't that large. But since 2019, so in the last 6 years, we basically just saw positive correlation coefficients between stocks and Bitcoin, or to be more specific, technology stocks and Bitcoin. Once we expand this even further, right, to an entire cycle, 4-year correlation coefficient, it's pretty much always very close to 1. Why does this matter? It matters because if you own more than just Bitcoin, if you've got a diversified portfolio, you cannot diversify yourself away from Bitcoin by buying technology stocks. You should buy something else, right? You should buy, for example, gold or property or something that simply doesn't move together with those risk on assets. There is, over time, more and more connection between the price movements of tech stocks and of Bitcoin. There is a real connection here. In other words, if you believe that Nvidia sales are likely going to go down, if GPU sales are going down, that the AI bubble will burst, if that is your prediction, you probably should also not hold that much Bitcoin, simply because Nvidia is a large part of technology, and when Nvidia crashes, the Nasdaq crashes, and thus Bitcoin is likely going to go down as well. I know it doesn't sound very rational, right? What does AI have to do with Bitcoin? But it's simply just how investors play the market. They're either risk on or risk off, and when everybody is currently risk on, when everybody buys Nvidia and then suddenly the market gets spooked and wants to be more safe, then pretty much everything that's volatile, and that includes Bitcoin, just gets sold off. It's also very important to put Bitcoin's existence, Bitcoin's history in the grander context, because Bitcoin got launched at the very bottom of the global financial crisis when everything was panicking. This is the historical Shiller PE ratio. So this chart starts in 1871. It tells us how expensive stocks are, how many earnings do we have to pay to buy a company, right? How many future earnings, and this tends to fluctuate somewhere, right? And since Bitcoin's existence, company valuations tended to go up. We never really saw a real crisis during Bitcoin's time. This year was the .com crisis. This year was the global financial crisis. This year was the oil crisis. And this year was the Great Depression. Bitcoin never really saw a major crisis. So all stocks have a price to earnings ratio of 35. The Nasdaq 100 has a price to earnings ratio of even 42. And the Nasdaq relative to the S&P 500 is close to all-time highs. This here is the .com bubble. So long-term tech stocks tend to outperform the rest of the stock market. And I'm not saying that we're going to see a similar crash to .com, but it also doesn't look like technology stocks are particularly cheap right now. This is the S&P 500 long-term, right? Starting in 1871. So more than 150 years of data. And this vertical line here, that's when Bitcoin got launched. So it was pretty much all just straight up. We never really saw any real correction. This is important to know. So at some point we might see again a major correction in traditional finance. And since there's now more correlation between technology stocks and Bitcoin, such a correction could spill over and potentially put us lower than we ever would expect. What we've seen throughout Bitcoin's history is not typical for the financial markets. Usually we tend to see more corrections. The way I'm currently playing this market is I'm rather risk off. I hold a lot of gold, but I'm also betting on falling prices, especially on falling prices of very weak altcoins. There's simply so many altcoins that underperform the rest of the market. There's so many altcoins that do much worse than Bitcoin, and thus betting on falling prices of those weak projects I think is a relatively safe moneymaker. The game is not necessarily about finding the one gem, the needle in the haystack that will make a 10x. The game can simply be to bet on falling prices, to bet on the ecosystem as a whole to contract. So our community continues to make money while most other communities get completely burned. If you want to be part of the people that still win, then feel free to check out both the premium membership down below. That's thebitcoinstrader.com. There's also a 1-week money back guarantee. And feel free to also subscribe over here. I publish videos regularly. A like, of course, would be very much appreciated as well. See you next time here on YouTube and potentially in premium. Cheers!